And welcome to a short Monday market update. Just wanted to let you know a few things that are happening over the next few weeks. Mastermind clients, we have released the workshop. So every month we will be getting together with a group of you named after a cryptocurrency of our choosing. And we're going to discuss your portfolio, your strategy. Joe and I are going to attend the session with yourself. It's going to be small, intimate groups like our bi-weekly sessions. We cannot wait. Also got the synergy sessions, which are going to happen at the end of the month as well, where you get together in your small groups and discuss what you've learned, where you're at, and how to go from there. So can't wait. Also, guys, we're in the beginning stages of organizing another Koh Samui trip. That's for everyone. So yes, exciting. We've got lots to share. I wanted to put that forward to you now. I'm going to crack into the markets. I've just done the mastermind update, and boy, there's some things dropping, including Jerome Powell. So I'm going to get into that right now. I'll just touch on a few of these top button topics. So this is pretty insane. So Jerome Powell came out and did a video as soon as this dropped. This is kind of the end of the Fed as we know it. The president is trying to exert a tremendous influence on bringing those interest rates lower. And that is the key signal through the noise. No matter what happens here, just think about, okay, it's the president of the United States. What does he want? He wants lower interest rates. He thinks the Fed has failed. He doesn't think the Fed is independent. He doesn't think the Fed are even data driven as well. And again, we won't go into that. But the Fed has had a history in recent years of being too late to everything, too late to inflation. Inflation's transitory, and now it looks like they're too late as well to the economy heating up, and Trump wants lower interest rates. This is a hot button topic because there is political consequences. We've got the midterms that are coming this year. Now, why does that matter for us? Well, we are solely focused on what happens in the United States around liquidity, business cycle. Is the market strong? Is it not? When the market, the US traditional market is strong and the economy is robust, we always see in recent history a flow over from that liquidity into risk markets such as crypto and Bitcoin. Now, there's been some idiosyncratic reasons why Bitcoin and crypto have actually been down over the last year. I personally think 2026 is going to be really big, and it is on the back of things like this. We are accelerating towards a point where there is just no hiding the fact that we're going to get a much looser monetary policy, liquidity flying everywhere, and that's inevitably going to flow into crypto and Bitcoin. Now, where Bitcoin comes into this too is if there is a complete loss of faith in this institution, and that is what the fourth turning is all about. So if the institution's crumbling, they're cracking, people lose faith in them, what do people have faith in? Well, it's stores of value like gold, decentralized stores of value like Bitcoin. So I would expect Bitcoin to actually get a bit of a bump from this, borrowing what we're seeing in the charts. But this, in general, in the macro view, this is very good for Bitcoin. So wanted to share that with you as my first topic of the day. Okay, real quick, what drives this market is institutional flows at the moment. And where we look to assess those flows is the ETFs. And I'm looking at the Capriol dashboard. I'm just thankful every day that we have access to this. It's tremendous. And we're actually saying that Bitcoin treasuries, Bitcoin ETFs, and general whale buying is actually a little bit down again. Now, this red line here, just to simplify things massively, this is the amount of Bitcoin mined per day. This is the demand where it's mined and then it hits the market immediately. We want to see demand from the ETFs, from the treasuries, and just in general to all be above. So all these different colored lines here, apart from this red flat line here, we want all that to be above the amount of Bitcoin mined per day. And that's a little bit high. We haven't been able to get up there for a while. The Bitcoin treasury companies are drifting higher, which is great. ETFs a bit of an uptick. But if we can get the demand higher and above almost the sort of the standard selling on the market, then Bitcoin will be high. It will be, around that 100K mark plus. The demand will override the sellers. So this is a fantastic visualization of where we're at, and the oscillator at the bottom here helps as well. When we are in a state beneath the amount of Bitcoin mined per day, you can see the red just popping up there. Same with here, really strong. And when we see those outflows from the major demand buyers, so the treasuries and also the ETFs, generally the market's a bit scared and in a state of panic. So if we're seeing that, then it's likely going to continue for a bit of time until we see potentially a mean reversion above. I think we're going to get that fairly soon, but it's just a matter of time. But watching these very closely. Also, I'll just pivot on over here to the OG whale dumping. So OGs have, I'll just make sure that doesn't go crazy. They've begun to sell some of the Bitcoin again. So again, as long as demand is strong, this doesn't really matter. But OGs have been, selling out a clip for some time, but it has been waning. has been beginning to slow down, which is a great sign. But for Bitcoin to continue higher, we need those demand drivers to come in as well. It's hitting it from both sides, supply and demand. And these OG whales need to just maybe wean off a little bit for us. But again, demand strong. It doesn't matter who is selling. There's always going to be a distribution. So that's exactly what I'm looking for here, guys. I want to see the demand come in, and we're just not seeing it quite yet. We're only seeing those sellers continue to be quite strong. But that said, we are slowly climbing a wall of worry, which is what I'll talk about next. Okay, Bitcoin. Look, I think it's doing everything that it's done previously in the ETF era. It's had a pump, correction, strong correction, pump. Correction, strong correction, pump. Correction, strong correction. Do we get the pump, or are we going into a deeper correction here? That's all I really think about here, but no doubt we are getting a squeeze. I know a lot of people saying we're in a bear market, we're doing this, that, and the other. I just don't see it, this macro environment. I do not see it, which is fine. I love to be contrarian in these moments, and if I'm wrong, who cares? I've got this upside downside strategy which will buffer me either way. And it's where I encourage all the investors watching this, or want to be investors in this space, that need to protect themselves and need to protect their capital. It's not just up only like it was a few years ago in altcoins and Bitcoin, but I'm solely focused on Bitcoin here because it does lead the market. And if crypto is going to move, we need Bitcoin in a much stronger state. We're just not there yet. We're not ready to be super offensive. We're still in that defensive mindset. We're either in Bitcoin, gold, or USD. That's where we want to be. But Bitcoin here doesn't look too bad, to be honest. As long as it's holding its 100-week moving average here at 86,000, 87,000, then we're okay. If we fall beneath that, then that's a danger zone. We want to be very careful if we lose that on a weekly time frame. And that's where I'm focused here, guys. I'm looking to remove a lot of the noise. So I'm not down on the daily. I'm not down on the 8-hour, not the 4-hour, 1 hour, definitely not. Weekly. Cuts through a lot of that buzzing that you see all over X and elsewhere. If we break through on a weekly through 94,000, I think that's a sweet spot. Then we're coming up to challenge that a huge overhead level, 100K, with the 50-week moving average through this zone. If we can get above 100K, I think we're going to surprise a lot of people this year in terms of how immediate this price appreciation could be. I think that's when we get that really strong next leg. But right now we're still in a bit of no man's land, but we are getting that squeeze, very similar to what we were over here. RSI beginning to trend higher. Need to get above 50 for it to really expand. But I'm seeing this quite favorably. But again, I want bulls to really prove themselves. Otherwise, we could just be running into the resistance, then rolling over. But personally, I think we're going to begin to trend higher through to this zone here. And that's when we can get a bit of acceleration, some stop losses getting hit, and demand will move us higher. And I just want to make a point before I leave off, guys, is higher prices will lead to higher prices. I know that's absurd, but it's exactly what happens. Momentum leads to momentum, prices leads to higher prices. We're also seeing a bit of a shift in stable coins. So this is USDT dominant. So this is the amount of stable coins that are out there compared to the rest of the market. In terms of percentage wise, where is the capital concentrating? Well, if we have a look here, USDT has been really, really strongly bought up in terms of the crypto market cap. And it's sitting at quite a high ebb. It's sitting above 6%, yes, as we speak. But if this were to roll over, very similar to how I've got my yellow line here, this is the dream scenario. This is the Goldilocks scenario where USD stablecoins begin to get sold into cryptocurrencies, giving that big boost and uplift in crypto. If we're beginning to see here a bit of a near-term topping formation, we want to see it lose its 200-week moving averages. Red line that snakes through here and the 10 EMA here. If it can close beneath that on a weekly, then I think, here we go. All bets are off. We're going to come down and at least test that, but maybe we're going to follow the Goldilocks zone. And that would mean the prices are beginning to move. They're moving higher. Money's flowing. Speculation's coming back. There's a lot of issues in the macro at the moment, a lot of cross currents. But we're really climbing that wall of worry. And all I think we need to focus on is liquidity. I'm looking at things like the Russell 2000, indicating the US economy is heating up, looking at all the liquidity that's coming as well. And I don't think anything stops this train, but it's just that near-term turbulence that we've got to navigate and just be really, really patient. All right, guys, if you want to know more about the mastermind workshops, reach out to the team. Something we're really looking to do with the masterminds. If you're new to this, don't even know what the masterminds is, all good. We have a fantastic VIP course, which we think is fantastic. It'll give you the foundational pillar for your education space. So maybe if you want to know more about what I'm actually saying, if it doesn't make any sense, it's probably too high a level. We need to really bring it down a peg. That's what our course does. If you have any questions, make sure to reach out and ask the team. Otherwise, let's crack in. Let's make some money. All right, guys, see ya, bye.